Hello guys, hope doing good and everybody's fine. So welcome back once again to my platform. And my name is Arvind Singh, and again today I'm going to take you guys through my new video. And here and I'm going to talk about market setups for the intraday swing trading or long-term tradings, where you can find it out key initiatives and key points for the intraday setups, and which can be very important and play a vital role for your day-to-day trading setup. So without wasting of the time, I'm going to take you guys on my chart, so there we can learn something few points, and that gonna be big situation for me, that gonna be win situation for me, where you can use such kind of points and setups for day-to-day trading activities. So I'll take you guys over there, and let's see how soon we can fetch all those data. So here in, so welcome guys again to, so today I'm going to talk about the elements to our trade setups. So what can be elements are possible for intraday trading setups? What are the elements can be possible for scalping? And what are the elements can be possible for a swing tradings? People do trading in 1 minute, 3-minute time frames, 5-minute time frames, 15-minute time frames, 60-minute time frames. Few people trade over the 40 to 40 minutes, which is called 4-hour charts time frames. But these elements can be possible in the two different scenarios. One is market parameters, market algorithm, or another can be a banking algorithm. Okay, so today we are going to see some few points which can be useful for any kind of trading styles. It can be a scalping, or day tradings, or arbitraging, or hedging, or swing tradings, or any kind of trading style which is suitable to your trade setups. So here in the first point which I'm going to tell you guys something about the expansion. So when we talk about the expansion is very important. So I'll explain each and every points. So first we are going to talk about the expansion. What is the expansion? How market get expand? So herein we are seeing the chart. So supposed to be, look at over here. This is called expansion. This is complete expanding of the market. Okay, here market is moving somewhere else here. If we magnet over here from over to here, then we can see something 24 hours in the 2 hours and 13 points, almost 1331 pips. So 13 points we got in the XAUSD, which is the symbol of gold. Okay, yellow metals. So here in generally we talk about the expansions. This is called expansion. Okay, this cannot be expensive, but this is the expansion. Here is when it's small expansion. Fine. Here we see an expansion. Here we are seeing the very long X over here. I will not talk about the tails, because here are cross-border sentiments which has been played a role in your trading. It carries a buy stop line and sell stop lines also. So here mostly you are getting loss in both sides. So this is a expansion what I have can explain. I'm explaining over here. Then after these one setups, because these are the elements, what things you need to understand. The first is expansion. The second point is a retracement. We always know that whenever market is going up, it has to come down. So that's why we always take a Fibonacci retracement, right? Fibonacci expansion, retracement. So supposed to be, this was the expansion. If this was the expansion from this area to over here, so I would like to draw some trend lines over here. From this lines to over here, this is the expansion. So obviously we know that the market has gone up, so it has to come down. How much percentage it would come down? Obviously 50% retracement supposed to be there. Fine. Exactly, market came not even the 61%, but here we are seeing a consolidation trend. So basically market is 1580, market came 1880. Gold, yellow metals, XAUSD. Okay, 50% retracement was done. So here now 50% would be working at a support level over here, right? So this is called the expansion. Okay, so here we got to understand about the expansion and retracement. So why these 2 points are very important for the intraday setups. The third point we called reversal. Obviously, when market has been expanded over here and has been retraced, now there will be a reversal. Okay, so again I will take the Fibonacci. That market has gone away, so I'll draw a Fibonacci over here. Fine. So market had a almost more than 51%, so almost close to 61% retracement over here. But 50% is a major area, okay, because it's like break-even point or equilibrium point for the any kind of expansion or retracement, okay. So this was the expansion. Market came and retraced at 50%. Now here would be the reversals. So here we can see something like market has to reverse from this range, okay. They're supposed there is a one range, okay. I would like to highlight. So this here is the one range, okay. This is the one range of the market. So from here, market has to reversal. So market has to reversal over here, okay. And we can expect a new high from over here. But again, we are saying here is the sum of the liquidity area over there, which I'll tell you why liquidity area. But first we can see over here, right? But is again negative trend. Here is a consolidation and move. But this is the reversal point. So now you got to know what is the reversal point and why these 3 points are important. Okay. So now after the expansion, reversal, and then we call about the consolidation. Okay. So now what market will do is a live chart of the gold. Here we have seen, okay, the expansion, retracement, reversal. Now market will do the consolidation. So basically, I would say like this can be one range over here. This would be the consolidation range. Okay, this can be a consolidation range possibly, or we can say from somewhere else here to somewhere else here, because market went over here, came down over here. This is the low. So here market has broken one character of change, and after this character change, market sharply came down. Okay, so this can be a consolidation range. So once we have completed our 4 phase, okay, for the intraday setups, correct. Now I need to talk about after expansion, retracement, reversal, and consolidation. Then we talk about the institutional order flow. Initial of this video, I told you about a market algorithm, whether you follow a market algorithm or a banking algorithm. Fine. So when we talk about the institutional order flow, means we are talking about banking orders flow, not like our retailers. Okay. So we have to follow the bank entries. Fine. From where, at what price, from on what time frame the banks are taking orders, they are buying and selling, that you have to follow closely. You have to keenly watch all those such kind of orders where you can find it out a 99.99% accurate trade setups for your particular trading style. So when I talk about the institutional order flow, I always talk about the order blocks. So what is the order blocks? Fine. I'll get you guys again on the chart. Here we can see one order blocks. Okay. Any kind of spacing. Here is the one bullish order block. Here we are seeing the inverted hammer over here, right? Fine. Here is we are not seeing any. This is the one order blocks. Here is a perfect hammer over here. Fine. So I would like to tell you this is the one order block over here, right? So if you guys know how to work on order block blocks, fine. This is the one possibly order block over here. Fine. This is the one of the another order possible another order block over here. Fine. And I'll tell you this is also one order block over here. Fine. This is the bullish order block over here. Fine. And this is also one order block over here, right? So these are the bullish order blocks we can figure it out. Okay. On upside, if I would find it out something like here we are seeing bearish engulfing, and we are seeing the bearish harami pattern. Okay. So this is also one order block over here. So this is the biggest order blocks we can find it out over here. This range to this range. Okay. Here somewhere else we can find it out. So what's the possibility how to work with order blocks? Next time I'll get one video especially for the order blocks. Okay. So today we have seen the market has gone up over here. And if market has gone, that it's supposed to come back in your order block zone. Obviously, market went up. Okay. Here market went high. And then again, market has to come down over here on this area. Okay. So this is particular area over here. Market has to return in this area. This is the order block. This is the only, the validation of the order block. Market went up, market came down. Here you have to buy. Okay, you have to buy over here and see the market rally. And again, we are seeing this market version under the consolidation. Here market came down. Again, it has to go. This is called reversal point. It has to come back into bearish order block. This is the bearish order block, and market will sharply come down to this somewhere else in the liquidity zone. So here is the somewhere else liquidity zone what we are getting over here, 1873. So this is the live trading what I'm teaching you guys. That's why order blocks are very, very important. Okay. So, a part of today you'll got the order blocks about like institutional entry points. Okay. And then I would like to tell you another things which is called my favorite, everybody's favorite. This is called fair value gap. How to find out the fair value gap? When we talk about the stock market, we invest in the face value, the actual value of any organization, of any bond. Okay. So when we talk about the fair value of that particular tradings or that particular time frames trading, then you need to figure that out. That is called a imbalance. Fine. Next time I'll be getting one more video about the order blocks. After that, I'll get the fair value gaps. Okay. So today I'll tell you some basic things about the fair value gaps because these things are very important to for our intraday setups. So what is the fair value gap? You know that this green candle is having a low of this. Okay. And this green candle is having a high of this. Okay. And then we see a fair value gap over here. And this second candle made a high of, then third candle was started over here. Third candle was started over here. So basically between in last three candles, last three swings or last three spikes, you can see this is the bullish fair value gap. And I told you, right, that here is a possible, here is the bullish order block. So fair value gap would be always above the bullish order block or below the various order blocks. So we got the fantastic setups over here. So now I'll tell you the very good interesting things. So this is the fair value gap over here, right? This is the fair value gap over here, and this is the order block. Market went up, and again to validate this fair value gap, or again to validate this order block, market has to come back in the trading, in the liquidity area, in the demand zone. So from here, market has to trade over here at any cost, again 73, or the whenever market is coming like 74, 71, keep the stop loss of this low, or previous order block somewhere else. Here we can see one order block or liquidity, two lows over here. Okay, so basically this would be the perfect 72. So $2 to $3 of stop loss, and target would be like very high, almost 10 points. Fine. So this is very important to understand. So this is called fair value gap. So one fair value gap we find over here. Fine. And then 1, 2, 3 here. And this candle and this candle is also having one fair value gap. I'll tell you where is the another possible fair value gap. So here the third candle, red candle, this, and another can be the low over here. So this is also having the one fair value gap. Another thing is last this candle and this candle is also having one fair value gap. So this is the one justification area, because market has to retrace between the these areas. Okay, so this is the high. So market, this is the fair value gap. Market met high, okay, and came again into fair value area and pushed down. Again, here we are seeing the similar, so this is why market is holding, the prices over here, consolidation, because this is bullish previous bullish fair value gap, which is holding it for the, pushing it up back again and again for the, previous somewhere else here order blocks. So these are the things which is very important to understand the fair value gap and imbalances. Fair value gap is also known as imbalances. When we talk about like bullish fair value gap or bear fair value gap, bullish fair value gap means buy side insufficiencies, sell side, buy side imbalance, sell side insufficiencies. And we talk about, when we talk about the bearish imbalance or bearish fair value gap, which is means a sell side imbalance or buy side insufficiencies. Okay. And then after the fair value gap, I would like to tell you something about a liquidity void. So what is liquidity void? Which is very need to understand, very much you guys need to understand what is liquidity void. So here I would like to tell you what is liquidity void. Fine. Here market went up. Okay. Liquidity void, I'll give you the example somewhere else. Here I'll give you market. From here, market went high and market came down and filled it with this. This is called liquidity void. Whenever is there any market, supposed to be the best example of the market liquidity is over here. Fine. The process started moving from here. Fine. And market went over here. Then market has to return this zone at any cost. This is zone. So basically this area, fine, this area, this entire area, this area is called a liquidity void. Okay. This is the very need to understand, because sometime what we are having, market sharply bent up and we are closing our position over here because we are getting the FOMO factor. It's called fear of losing money, FOMO, or FOGO, fear of greed. So you don't have to indulge into FOMO and FOGO factors. So this is the liquidity ball. So sometimes we are taking the stop hunt over here and market is coming and making us profit. So we need to understand this kind of factors, which is very useful. Now the another point I'll tell you guys, last and final point for my today's video. Fine. After we got to understand about the order block, fair value gap, liquidity voids, and I talk about the liquidity pool. So what is liquidity pool? Very very much interesting topics. Simply, there are two kind of demands and supply, John. Okay, one side, one supply, one John is over here, and another John I would like to get you over here somewhere else. Okay, so this is called BSS, buy side supply, and this is called sell side supply, John. Okay, so whenever market is making two equal lows or almost equal to lows, here I would like to tell you something. Here we are getting one low is over here, okay, and another low is over here, right? So this is the one of our demand zone. Okay, this is our sell side supply zone. So now this market has to come. So first market hurdle will be over here, because market can take a reversal over here, because of here is a previously bullish FBG is also here, which will give a good challenge for the bearers or bearish market competitors. Okay, so once this low will break, then there will be a change of character and market will sharply come down from here to directly over here, this zone. Okay, so you need to understand this is called a liquidity pool. This is also liquidity pool. This is called SSS, means sell side supply zone. This is buy side supply zone. And whenever I'll get the new videos, because there are multiple videos I have to give to understand all such kind of things, so I'm going step by step sections, guys. Okay, so you can understand such kind of factors. So today that's it from my end, and I'll catch you in next, guys. So stay on my videos. Kindly subscribe, forward it to your friends, and those who are seeking a good profitability from the stock market or forex market, mainly, so they can understand about the market. They can watch my videos, they can subscribe, like it, and forward it to those friends. And also they can subscribe my monthly mentorship programs. Okay, we are giving, I'm giving the lectures or mentorship program on every weekends. Okay, so every weekends makes 2 hours on Saturday and Sunday. So you can subscribe our packages and you can join me over here. And as you got to know that we are teaching the people not like traditional technical research. That's why I always say dare to think beyond technical research and analysis. Thank you, guys, from my